Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Friday morning pre-market webcast. Okay, daily chart of the ES, and what are we seeing here? We talked yesterday about how this probably was not going to be a lower Bollinger Band ride, and what we had more likely was probably going to be some kind of a small bear flag, and that's playing out a little bit here. We keep getting these highs that are rejected. The fib level here, the 38% fib at 1647, continues to hold things in. I've still got this trend line drawn here. And the reason I have it here is because I think it's a very likely place for a lower high. I think any kind of a move above 47 is going to start to get people excited, but I think, in looking at the chart, that it's got a real opportunity to tire out there, kind of like this move did. When we got up into the 67 area where we just can't quite get it done. And when it gets up to that area, it's going to do everything it can to talk you out of wanting to sell that rally. Just like yesterday. I mean, we got up yesterday above 42, got up into the 44 area, and we just sat there for 2 hours. And half the people thought it was a top, half the people thought it was a launching pad for something higher. What it was a great way to get chopped up for a couple of hours and drive yourself nuts before the market decided what it wanted to do, which was to do the same thing that it's done for the last week or so, which is sell the close. So in the overnight, we saw a push back up. We retested yesterday's highs. We traded as high as 1645, so one tick higher versus yesterday's high. And now we have sold off. We pushed down to 36 a little bit ago. We've got Chicago PMI coming out at 9:45. We got consumer sentiment at 9:55. So it should be a fairly active open and a fairly choppy open. But I'm not expecting much different. I'm expecting some kind of a high. I'm also expecting today, really after the noon hour, to really just kind of slow down to a crawl. We've got a 3-day weekend, short week next week. The one thing that keeps going through my mind is if I'm a long in this kind of a tape, and I've got Syria on my brain and everything else on my brain, and I've got 3 days where I'm going to be out of the market, essentially, do I really want to stay long? At the same time, if you're short, you've got 3 days where, who knows, some kind of a deal could be brokered in Syria. We could have a huge gap up at the end of the weekend. So, both sides have a lot of reason not to make big bets today, which I think is going to turn this into a real, summer Friday once we get into the afternoon. The summer Fridays, the slow down days, the slow days always favor the bulls. They always tend to slowly grind up, and that would continue my lower high thesis here. As long as we're trading between the green line here, recall, as long as we're trading between the green line, which is the middle band, and the lower band, we are in sell rallies area, and that has worked. And there's nothing in this tape that has happened yet that indicates to me that it's not going to continue to work. So it's okay to be long these rallies. They are some excellent rallies to be long. Just understand that you need to be long them with a mind to selling. So everybody have a fantastic Labor Day weekend. Mike Vacchi, PrincetonTrader.com. I will be back Monday night with Tuesday morning with another webcast. Monday night with an evening recap. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. Start off September with a 2-week trial to the chat. We're in there selling rallies. We're getting long, getting short, and it's been going very well. So I hope you'll join us. Have a fantastic Labor Day weekend. Trade 'em well.